Yep. NSC, Norfolk.
Right.
Ready? 153 versus 139 sales. 2.82 billion.
153 said?
Yep. 2.82 billion.
153 point or what?
2.82.
122.
Two. 2. Time to wake up, traders, and start your day with Benzinga's pre-market info show. Today is Wednesday, October 23rd. Thanks for joining. Hope everyone's morning is going just great. Quick futures check for you. S&P futures are trading about 8 or 9 points lower. 1740.25 last trade I see there. Dow Jones down around 60 plus points. Last trade there, 15,326. Quick check on commodities. We do have crude trading around 96.88 per barrel. Continuing lower from yesterday's move. Gold is trading at 1331.10 per ounce. Hit you with a couple quick news items for this morning. If anyone was wondering why shares of Netflix were plunging yesterday, well, we found out after the close with an amended 13D filing from Carl Icahn. Uncle Carl selling, let's see, about half his stake, reduced his stake from 5.5 million shares down to 2.6 million shares. That was from about 9% to around 4.5%. Shares of Netflix are continuing lower this morning, down around 2%. The stock did fall nearly 20% over yesterday's session, opened above $380 and closed right around $322. Shares of Netflix getting killed yesterday, and turned out it might have been because Mr. Icahn selling some of his stake. Carl Icahn did issue a tweet following the amended 13D filing. He thanked Reed Hastings, Ted Sarandos, the Netflix teams, and of course, Mr. Kevin Spacey. In the filing, Icahn saying that his cost basis is $58. Carl making a boatload on shares of Netflix. However, in that filing, Icahn did say that the stock remains, quote, significantly undervalued. Obviously, he still does have some shares in there, so he probably would say that the stock is significantly undervalued. Earnings season continuing today, will be continuing for the next couple weeks. The Benzinga News Desk is working hard to get you guys the hot earnings items you want. Last night we did have STM Micro. Shares are trading down around 6% today. We also did have State Street, Amgen. Amgen shares are up about 1.5%. Shares of Cree getting killed today, down around 15% on results last night. Also had shares of Broadcom down around 8% right now. They also had earnings this morning. We had Boeing, we had Caterpillar, we had General Dynamics, Eli Lilly. Should I keep going? I'm going to keep going. Bristol Myers, Motorola, NASDAQ, Northrop Grumman, Owens Corning Tupperware, and just recently Brinker International. A couple highlights from those. I'm going to let the pre-market info boys get into those numbers a little bit more, but just give you a couple quick headlights. Quick headlines, that is. Boeing did beat and issue some strong guidance. They did raise guidance. Caterpillar, on the other side, issued a missed and lowered guidance. Shares of Apple trading down around $2 this morning, continuing lower following a sell-off yesterday after the conclusion of that Apple event. At the event, Apple and a couple Apple's Tim Cook and a couple other execs unveiling some new MacBooks. We did have a couple other stocks that were moving on that event. Shares of Pandora spiked initially higher following the event. Shares of OmniVision, that's Oscar Victor Tango India, and also shares of Logitech, that's Lima Oscar Golf India, also moving on that report. Taking a look around Wall Street today in the financial sector, we did have JP Morgan. JP Morgan shares trading down about 0.5% this morning. There was a WSJ report that the bank is in talks with bond buyers about some 5.75 billion in MBS claims. Shares of JP Morgan, let me check the last trade in JPM. Shares trading around 53.25. Once again, down about a 0.5% for the session. A rumor last night on Men's Warehouse has shares trading slightly lower this morning. Men's Warehouse rumor was that they may bid for a company named Allen Edmonds. Shares trading down about about 0.75%. Heads up at 8:30, we will have import price index for September. This data point was delayed a couple of weeks amid the government shutdown. We will get that data at 8:30. We will be breaking into the show with that data point, seeing if it's moving futures. Let's get you one last futures check before the pre-market info show gets kicked off. Pre-market info show will give you run down a couple of these headlines that I went over and kind of critically analyze some of the important levels there. S&P futures flash trade at 1740. NASDAQ futures trading at 15,335. Let me take a look around and see if the pre-market info boys, Joel and Dennis, are ready to go.
We're ready to go there,
Oh,
Brent.
good morning. Good morning,
We're ready
Dennis.
to rock.
That's
We got
great.
a sell-off. We got a sell-off here. Overnight sell-off. Down 9 points here. 1740 and a half. We've been as high as the close, 49 and a half, so we could never get through settlement here. We've been as low as 37 and a quarter, so pretty extended overnight range here for once. A little bit of action here, Joel.
Right, could not hold that close of 49.50 off the hop open there. That was the high tick. We came down, Dennis, to 38 and a quarter, which was Monday's close. We snuck through there. Went to 37 and a quarter, but we've gotten a little bit of a bounce. So let's just take a look at this important level on the downside, 34.75. Monday's low, Tuesday's low at 36 even. Right there, that's your major support point. Bulls are still in control until we take out that level.
Gold trading down here this morning, too. It's kind of a broad-based sell-off. A lot of different sectors here are down here this morning. And like we've said before, usually gold will rally when the market is selling off. Not the case this morning. Gold trading down here about 0.75%.
Right. I had a nice rally yesterday, even though the market was rallying. I thought that was a little bit strange.
Correlations
Yeah,
against going positive all of a sudden.
right. Couldn't take out yesterday's high, 44.70. Sellers came in and took some profits here. We're well below the close. I wish I could tell you there was some support here between the triple bottom we have at the 1310, 1312 level and here, but there's really not. So gold kind of in a tricky range here. I think if we get anywhere back near the 1340 handle, you should find some sellers.
Crude still showed a little bit of weakness there yesterday, too. Here, bring up the chart of crude. We'll take a look at what that is doing overnight here as well.
I was doing my levels for subscribers and was looking at the chart on this, and I'm like, holy smokes! I mean, there is nothing under the 97 or 98.11, which was yesterday's low. I didn't see any major support in the rest of the 97 handle. I saw a low on July 2nd at 97.11. Market said bye bye to that. Went down into the low we're in the mid 96s now. For you holders of the crude contract, I see some major support of the July 1st low at 95.40, but that's another stick. Yeah, stick away from here. But boy, I tell you, oil is just on the skids today.
Let's move into the big mover yesterday. Obviously, was Netflix. Open high on their good earnings report, had traded up all night. But then Reed Hastings comes out, the CEO, and warns of euphoria. I don't know if I've ever seen that. A CEO come out and warn of euphoria in their own stock, basically. In other words, kind of saying that he thought the price had gone too far too fast. And what a scary thing for shareholders to hear from the CEO when they think all of a sudden that their stock prices run up too quickly. And kaplooey, they started selling that and whacking that stock yesterday, and they did not let off.
Well, I guess I should have paid $22 for that 350 put before the options. I would have been before the earnings. I probably would have been crying when it went up to 390. But Dennis, let's get a couple examples here of pre-market trading and what can happen. You had the example with Google where it just busted through that pre-market high and kept on going, but that wasn't the case with
Mm-mm.
Netflix. Nope, made a 396.69 high in the pre-market, but it did not even sniff that during the regular session, only getting up to 389.16, and then, but I mean, I guess it pays to listen to a conference call because those comments just set the stocks,
Holy cow.
yeah, spiraling down here. Of course, we're going to have Richard Tulo of Albert Frieden Company to discuss his take on the issue. But let's try and get down to the nitty gritty here for our traders that are trying to manipulate or trade this stock today. 308 we hit in the pre-market. We've gotten a little bit of a bounce over to the 320 level. 322 has been the recent high. Let's take a look at the daily charts here. It's to do levels on something like this is pretty difficult, but let's use that close. 322.52 is another resistance area. People just may want to get out at the mark that we're buying down all day. Yes, for the entire shellacking. Then above that, I like to look at a former low as a next resistance point, and that would be 340. So there's a couple parameters to look at on the upside. On the downside, 306 was your low on October 14th, and then you had a low at 300.13. So you got to think they've taken it close to the 400 level down to the 300 level. You think they're gonna make some people squirm there? What do you think, Dennis?
Yeah, and they also have other news on it too. Icon reducing his stake, which Brent had told you at the top of the show. He reduced his stake, selling 2.9 million shares, so basically dumping half of his position. Obviously, shareholders didn't like that when he tweeted that out too. The stock fell another $10 on that tweet. It has popped back. It has came back quite a bit. Obviously, the big psychological $300 level. I wouldn't be surprised if we did test that today. But that needs to hold for these bulls to keep control. But man, that was an ugly reversal day yesterday. And not only for Netflix, there was a reversal in a lot of the big guns yesterday. The leaders, the market leaders that had basically led this entire rally were showing weakness. And I talked about Facebook yesterday or 2 days ago showing a little bit of weakness. Well, yesterday the sell-off continued for Facebook. It put in basically a triple top up there, 54.82, 54.81, 54.76, and then just started falling back on the Netflix Hastings comments.
Right, and Dennis, you had a lot. We were talking about trying to short that yesterday.
Oh
How
yeah,
did
I
how
was.
did it go?
You can't, and I don't listen to my own words. I actually did this lecture to Bright Trading in Las Vegas, well, through webinar, but out at the Las Vegas Bright Trading retreat yesterday, talking about information arbitrage. I was talking about how you can't use limit orders. You can't just sit the orders out there. You need to use either algorithms or something because a lot of times they will go to your limits and not trade through it. But I don't listen to my own words, and I sat an order out there at 54.77. I sent this pre-market to sell because I said, if it gets up there, I think there's resistance up to that whole 54.80, 54.82. I threw it a nickel down at 54.77. I bring it up, later on in the day, looking at my limit. I look Facebook's trading down. I was like, oh, I didn't get it, and the high is 54.76. So I missed by a penny, of course. You can say, oh, what's your 500 or 1,000 share lot of Facebook do? Well, off the bat, the liquidity, even in Facebook, the real liquidity, is not as high as you think it is. It's trading pretty crazy, but in that first opening minute or two, it's not as much liquidity as you think. There's lots of trades going on. There's lots of liquidity the appearance of liquidity out there, but a lot of it's high frequency liquidity that is floating around. So when you get a real order sitting out there, it can actually act like a little bit of a roadblock. So what I should be doing is having some type of algorithm to hit the bid when it gets bid up there, as opposed to sitting a limit order out there and letting other traders just lean on my limit order. Facebook, usually will give you, because it usually trades active enough that I don't think your limit order is affected too much. But on smaller stocks, those limit orders can totally affect the price.
Well, you know what Bob Bright would say to you.
What would Bob Bright say, the CEO of Bright Trading?
He
What would
would
he say?
say limit orders, limit profits. A couple.
That's interesting. Yeah, the Bob Bright's always and he's like known as Bob Bright founded Bright Trading back in 1992. A lot of people call him the best day trader in the country. He still sits at his desk. I think he's 75 years old. He's still there and he's still making a ton of money trading these markets. Bob Bright is basically a market genius. So anything that he says, you always take and you try to figure it out. Sometimes he talks so in depth you can't kind of understand it because he's thinking 3 steps ahead of everyone else. But the one thing is with limit orders, just going back to the whole thing is, and I can post this video up there that I did. It was an hour presentation, but just showing how limit orders are tricky in this market because so many participants, short-term participants, are leaning. They'll lean on your order. They'll trade ahead of your order. They'll step ahead of your order, and you can't use market orders either. So it's like you can't use limit orders. You can't use market orders. So
What are you
what
gonna
I'm
do?
telling you to use is like take liquidity. It's more marketable limit orders is what I'm talking about,
Okay.
where you actually have the bid at 55. Let's say the bid got up there to 54.76. Well, hit the bid, send a price of 54.76, or maybe send an aggressive marketable limit where you hit the bid at 54.75 when it's bid 54.76. But if you send a market order, it's a high frequency world. Prices change too rapidly. You might get filled like 54.60 or 54.50 or something crazy. If the stock's really moving actively. So don't suggest market orders, don't suggest limit orders. Love marketable limit orders. If you're interested in hearing more about that, I will post that video up there. I can send a link out or something later.
Okay, just real quickly, we've hit 51.22 in the pre-market in Facebook, getting a little bounce at that. The other thing I wanted to point out to our traders, and I was talking about this with the boys on the desk yesterday, when Facebook had that major decline there from the triple top level, it got down to 52.20. And if you go back and you look at the 17th, October 17th, you had a 52.22 high, and so it came down. We talk about gaps being filled. It came down and filled that gap, and then it had a intraday 50% retracement back up to the 53 level. So keeping an eye on that pre-market low in Facebook at 51.22.
And some of the other big guns were reversing yesterday too. If you look at some of your leaders, Priceline had a big reversal there for a little while yesterday after making a new high just under the $1,100 level, where it got up to 1098.70. PCLN then reversed, got all the way down, holy count, at 1057. So we saw just a quiet 40-point sell-off in Priceline. It did bounce back, close in the middle of the range, but is trading weaker here again today. Priceline is trading down. It's ticked down only 100 shares, but it's ticked down over $10 here this morning. So looking like your leaders could be your laggards here once again.
Pre-market low in Priceline, 1057 right on the nose. You got to bounce up to 1080 here. It looks like someone has a little opinion here. Oh yeah, over the last hour here at 1080, just kind of light trading here in this $1,000 stock. Taking a look at Priceline though, longer term, Dennis, you got to 1051 on on Monday, 1057 on Tuesday. So let's call that whole 1053, 1055 area as major support. If you take that out, you do see some lows in the $1,000 area, or between 1,000 and 1,050. But would not like to see this thing if I'm long it below 1,050.
Where was this money going, though, was the question yesterday, because I actually tweeted out when all of this weakness started, I tweeted out, I was like, I wouldn't be surprised if we actually closed negative today with these market leaders starting to roll over. I was tweeting that out around 10 o'clock. I was wrong. The market did not close negative. The market actually closed strong. So it wasn't a rotation out of equities altogether. It was a rotation from the leaders, and they were looking to the laggards and to some of the defensive issues, which were really, really strong on the day. Take a look at the chart of Alcoa. This is an unbelievable move for a stock that has been dead money for basically the last 5 years. Alcoa went from 865 yesterday and got as high as 963. It had a dollar range. Alcoa's range is usually about a dime. Like, this is just an incredible move for Alcoa, an incredible breakout of an extended, like it was breaking out actually, so we'll give it a little bit of props. It was leaning up, but I don't think anybody in the whole world saw a dollar move coming in Alcoa yesterday. And that's what they were doing. They were looking like, oh, I don't want to have these huge profits with Facebook, huge profits in Priceline. Netflix I'm selling here now too. Where can I put my money? What's cheap out there? They looked at Alcoa and they said, buy it.
What? Wow, now the question is, Dennis, you're the big fan of the 2 day move here. What a monster move in this thing. I
Monster.
mean, boy, I'm glad I wasn't trading that thing because I think I would have been short the float on something like that, the way the thing trades.
I think a
But
lot of people probably were.
yeah, it had a double top at 868, and then it got rocking and rolling. Huge volume, almost 10 million shares, too. I mean, this is the highest that Alcoa has traded in quite a while here. You need to go back until September of 2012 to get a look at where Alcoa has been here. And this chart looks like it has some room to run here. It got to 979 back in September of 2012. That was a major top along with 993. But you just gotta imagine we did trade off the high of the day, which was 863. We made an 836 close. So I think you're going to start to find some resistance at the close at 936, and then I think things will thicken up all the way up to the 963 area. This is just such an uncharacteristic move for this slow moving stock.
Crazy. A lot of your defensive issues were strong again too, and give them props. They had been actually strong coming in. If we look at stocks like Procter and Gamble, they had been running up. But PG was up another dollar yesterday. You had Johnson and Johnson up over another buck yesterday. So money was looking for a home. It was finding it in some of the laggards, and it was also finding it in the defensive issues.
Right, this Johnson and Johnson was strong right off the bell. Did take out the double top that you had at 92 even and 92.05. Closed right up near the high of the day. I believe there were some institutional sellers there. With the S&Ps down 9 points here, and Procter and Gamble trading down 55 cents here. I expect some resistance to start in that, reinitiating the 92 handle. Sometimes institutions will, put half of their lot there, let it get filled, let it trade above it, but still, when it comes back, they might put the other half a lot out there. So still looking at this $92 level as resistance in Johnson & Johnson. And just real quickly on the Procter & Gamble, that thing was kind of roaring, kind of winding up, had to double top at 79.47.57. Busted through that there early in the session, got all the way up to in the 80 handle, got up to 80.61. If you take a look at the dailies here, folks, you will find a corresponding resistance level going back to September with an 80.53 high and an 80.48 high. So that whole 80.50 level, we're only 30 cents away from the pre-market. I expect that to be resistance again.
If some of our users are having a little bit of video difficulty, it looks like we're just having a little bit of trouble with our high def feed there. We do apologize for that. You might want to try to refresh it too. That might help as well. Just moving on here though, let's move to some of the earnings here, Joel, because we've had a ton, and I mean a ton of earnings. We are in the heart of earnings season, and there are some guns reporting here this morning. Let's start with Caterpillar. They just missed earnings here this morning, and the stock is getting beat up here. $1.45 versus $1.70. 13.4 billion versus 14.4 billion. So they miss on the top, they miss on the bottom. They guide kind of lower, 550 to 650. Estimates are at 619. So I'm not sure if you interpret that. I guess it could be up at the higher end of the range there as well. But the stock is getting beat up here this morning. We are trading at 85.36 right now, after closing at 89.17, or after closing at 87. What was the close there? I've got two different prices. 89.17, Joel? Is that what the close
I got 89.17 the
Yeah,
close.
I don't know why my other software is saying that it didn't have that day, but 89.17. So we're down $4 here on Caterpillar.
Right, and just taking a look at this, the pre-market chart. Sometimes we talk about a base being formed or some support. You're just kind of plopping on the low here. 81,000 shares have traded, so some decent volume here. So not really quite a bottom yet. You have to look at the dailies though, Dennis, and we try and use the pre-market levels to correspond with daily levels that add some significance. Lo and behold, you look at this $85 level. You had a low just 4 trading sessions ago at 84.95, 7 trading sessions ago at 84.86. So it's going to be critical for CAT to hold this $85 level. We are trading there in the pre-market. Might get a little bit of a bounce there. What I also think is interesting about this stock is you probably got a lot of people leaning the wrong way, Dennis, because you
It's
busted
running
through
up
the
in
up.
earnings.
Yep, you had an 87.75 high on Friday, an 87.80 high on Monday, so you had a double top. You got the momentum players barreling in this above 88 because you also had some highs back there in September, and then it boom turns around and reversal of fortune here. If it does not, in fact, hold that $85 level, I still do see some support in the 84 handle. 84.35 was a low, and then if it's really going to be a bad day for Cat, 84.07 was your low on October 10th.
And we might as well take a look at its brother Deer because obviously a lot of guys like to trade Cat with Deer in their pair trades. And DE is trading down about 75 cents in sympathy with the Caterpillar move there. Stock looking like here we were up there at resistance multiple times on this chart. We topped out in the mid 84s, looking back to August, back September. Almost looks like $85 was kind of like the wall up there, the Great Wall of China or something. But stock is obviously selling off here this morning. And I'll tell you, support's very well defined too, like major support down the 82 level. I don't know, can we find support a little bit above there though, Joel, on Deer?
Yeah, I'm having a little trouble with my charts here on Deer.
DE.
DE, just going from memory here, taking a look at the pre-market. You got a spike down to 83.15. Not a lot of volume. You got a little bit of a reprieve up here to the current trading price, 83.79. But boy, I wish I could show you the daily chart here because 82
It's
bucks,
huge, man, I'm
huge,
telling you.
huge.
Right, the
I
chart, you can just see it jumps out, and that's what we look at. I'm not doing it, sorry. But
Go ahead.
82 bucks, like when you look at a chart, I always like to look at what jumps out at you. Look at it for a split second, what level jumps out at you. That's the key level. You know, if you're looking at it, you're trying to analyze it, trying to extract different information from that chart, look at it simple. We're all about the KISS method here. Keep it simple. And I'm looking at that chart, and two levels jump out to me on Deer, 85 and 82. Call that channelingstocks.com, call that range trading, call it whatever you want. But in the last 4 months, every time it gets down to that whole 82, 81 and a half area, it has bounced. Every time it gets up in the high 84s, 85 area, it has sold off. You are right dead in the middle of that area right now. So what I do when the stocks are in the middle of the areas, I usually sit on my hands. I don't try to be a hero calling, oh, maybe it'll go down to 82 or maybe it'll rally back up to 85. But if it gets down to that 82 level, that's where I'm looking. That's a nice setup. That's what I'm looking for, as possibly, to buy it there because I've seen it bounce, a bazillion times here in the last 4 months. It could do that again. And these levels don't work in stone. You can't just all of a sudden say, oh, it's 82, it went to 81.75, it's broken down. Well, it's broken down through the 82 level too. You've got to give it a little bit. We're in a high frequency trading world. We're in a lot of choppy world. But, if you have a good risk return, if you say, I'm going to buy this 82, I'm going to risk $1 or something. If it gets back to 84, I'll sell it. So you're looking for a 2-to-1 risk reward ratio, which is usually how I like to trade. And that can be a nice setup. So that's what I'm looking at in Deer from my own trading perspective today.
Do you consider Ingersoll Rand that highly correlated to it, or not really?
Why I don't trade Ingersoll. You know why I don't trade Ingersoll Rand. I don't like the ADR thing. I don't like the PA. Anything that's not, traded over here on the primary exchange. So I don't think the correlation is that high. The Deer Cat correlation I think is much higher than the Ingersoll Rand, tying that in there. But any big machinery company could be a little bit affected by this. Obviously, Caterpillars, that's a pretty major miss. So if you're trading any big machinery, you might want to just be careful on those stocks today if you're buying the open. We're going to get those numbers here just from Brent here. He's going to break in a second, and then we'll get to some of these other earnings reports as well because we've got Boeing, we've got Bristol Myers, we've got Lilly reported, Cree, we've had a whole pile report. But Brent, you got those numbers there?
Import price index for the month of September coming in at up 0.2%. That's right in line. Year over year, import price index was down 1%. That was also right in line. The readings for August were revised higher, month over month revised from unchanged to up 0.2%. And year over year revised for August from minus 0.4% to minus 0.2%.
Thanks, Brent. S&P futures action, once again, very muted response. They like to move off jobs numbers, and they don't like to move off a lot of other economic numbers. So, but the market's still hanging out down here, down 8 points. Let's move on to some of the other earnings. Joel, there's just a ton of them. Let's go to Boeing. Boeing is flying this morning. We are up $4 here on BA. $1.80 versus a buck 54, 22.1 billion versus 21.65 billion. So they beat on the top, they beat on the bottom, unlike Caterpillar, and they're raising guidance 650 to 665 versus 650 estimates. So saying everything good and investors are happy as Boeing flying to new 52-week
Yeah,
highs.
127.75 is your high in the
Whoa.
pre-market. You've had a pullback here to 126.30, so those are some levels to keep an eye on. Blowing away the former 52-week high and all-time high at 122.48. So that would be your only support level. But Dennis, when was that whole problems that they had with the new jumbo liner?
Remember
Where,
that?
remember was that? Was that about a year? Was it?
Yeah, and the stock kept going from like 77 down to, the low or the high 60s. It kept, that was when we went from basically
Really?
2012. Yeah, it was a long time ago. It was back then. I can remember the pricing. It was like mid to late 2012 where we were like probably up about 75 bucks and we sold off. There was one bigger sell-off though in there, wasn't there, where it went down like 10 bucks or something? Trying to just look at the charts there myself.
Yeah, I
But I
got the
think
I
that
got
was
I got the. It's hard to tell on the daily here, but boy, there's a. I remember, a couple of the analysts, piling in and saying it was still a buy, and
give them props.
that's one time the analyst got it right.
Analyst got it right there. So, and Boeing has been straight up ever since. So I guess if you were buying those planes when they were on fire, you were doing well. So, Boeing doing good here, breaking out to new 52-week highs on 90,000 shares this morning. Also, Bristol Myers just broke BMY, reporting earnings 46 cents versus 44 cents. Also 4.07 billion versus 4.02 billion. The stock has not traded very much. I will tell you the area of resistance. You can look at this chart. What jumps out at me? 50 bucks. What jumps out at me in the book? 160,000 shares on the New York book selling at 52. So some institutions sitting with their GTC order there, saying, I don't think this is going above 50. There's a guy in the pre-market offered there at 52. So he says, I don't think it's going above 50. Personally, I don't think it's going above 50, at least not in the pre-market here. If it takes it out during the regular session, that's another story. But that's going to probably be your initial resistance area. We'll have to see, though, if they start selling the stock off. Joel, you got support for us somewhere there?
They've knocked it down on very few shares here, so not no
1,000.
concern. Yeah, as far as the volume goes here, the $49 level, 48.75 here was your low, your 2-day low. We are trading 49.21 was the low from yesterday. It is lighter volume here, so if it could hold 49.21 here, might have a chance to rise up, maybe perhaps get back into the mid 49s here. I'm just going to call this whole $49 level if I've been holding on to this stock here since this run since 42. You had that 48.75 low surrounded by the 49.17 low, 49.21. We'll just call that whole area your major support point for Bristol Myers.
I'm hearing another mic on the background. Not sure if somebody's rubbing their mic there, but Lilly LLY $1.11 versus $1.04, 5.77 billion versus 5.76 billion. Stock is trading here just up a little bit, $50.65. It had a good run there yesterday too. It was running up, obviously, on some of the defensive issues, like we were saying, were stronger yesterday. And Lilly broke through that $50 resistance area, and it is continuing to run here on its earnings report as well.
In the pre-market, had hit 51 and boom, just stopped here. Someone has opinion here at 51. Since hitting 51, and this is a pretty unusual pre-market chart here. After hitting 51, you've come down to the 50-50 level. You're finding good support here, so someone is playing the half and whole numbers here. Looking at the dailies here with Lilly, pretty thick stock here. So when you get a big move like this in the pre-market, you have to take into account the stock that's going to be in the book here. It had been lid has been on this thing at 50.29 and 50.37, which was yesterday's high. Also multiple highs here around the 50.70 level. So A lot of resistance here at 50.70. 51's the pre-market high. You break above 51 here, and not much from the 51 handle up to 52. But just looking at this chart here, just should be interesting. This 50.70 level currently where we're trading was a not even a double. It was a triple top back at the end of September, early October.
Your big loser of the day, CREE, trading down almost 12 points right now, down 16% on their earnings report from last night. 39 cents versus 39 cents, 391 million versus 392 million. Guidance, lowering guidance. That's what's really getting it here. 36 cents to 41 cents they're seeing next quarter, as opposed to estimates up to 44 cents. So CREE, not looking good here this morning.
A little bit different of a pre-market formation here. The initial spike on the news took it down to 61.72. But since then, someone's been defending this $62 level. I really haven't been able to trade under that. Got as low as 62.10 on a couple occasions. So I'll look at that 62 level to be initial support here off the open. Taking a look at the dailies for Cree. Yeah, got a long way. Look at this 62 level, Dennis. You had a 62.69 low on the day that it gapped up. And that's you come down, and that's the level that you got a little bit below that, but that's a support. Below that 62, you take out the pre-market low and the low 62s, you gap to fill down to 60.55. So that's a vacuum area. We'll see if the shorts or some early longs can defend that $62 level.
Talked about one of your big losers on the day. Let's talk about your biggest winner on the day. At the top of my leaderboard is Corning GLW. Stock is going to acquire full ownership of Samsung's Corning Precision Materials. This isn't Samsung. This is the company's called Samsung Corning Precision Materials. They see this acquisition increasing 2014 core earnings by 20%. Well, I guess if they're saying that they're going to increase earnings by 20%, they immediately price that in because the stock is up 19.5%, trading at 18.35. So this is an absolutely mammoth move for GLW. It usually moves 20, 30, 40 cents possibly in a day, maybe even less than that. This is over a $3 move. How high did this thing get after hours last night? Because didn't this touch up in the high 19s?
It got to 1966.
Come on, holy cow, man! They just buy stuff. They get excited. Those news algos and everybody else gets real excited when this news breaks, and they start buying something. They mean to buy it, man. And I don't know. That seems like an overshoot, especially when you think about how close you were approaching to a critical $20 hurdle up there.
Right, 1966. Since hitting that level, you did make one pullback to the 1805 level. Made another run at 1950. Was rejected again. The curve, kind of falling off here at the 1850 level. 1826 is the pre-market low. I'll give support at 1805, but you break below 18 here. Not a lot to get down. You got a long ways to fill the gap here. You got to get all the way down to 1548. But looking at this stock longer term, the weeklies don't do you any good. The monthlies will give you a little bit of a perspective of. Remember this stock that when we were trading this thing at Bright during the bubble when it got all the way to. How high did this thing? It got over $100. Let's see what the all-time high is here. Wow.
Your charts are going to go back further than mine. I don't even know if I can go back to 2001.
Yeah,
but how high? Do you have it there?
Yeah, 113, 30.
Oh, there it is. There's your tech bubble. Remember the tech bubble? Bring that chart back up. There's the tech bubble. That's the tech bubble back in the day. That's what a lot of stocks charts look like. This huge mountain, Mount Everest, basically, and they all came back down. There was the tech boom and the tech bust right after that, and GLW was right in the middle of all that. But it's coming back here this morning. If you held on, and if you're long today, you're pretty happy. You just made 20% on your money.
Yeah, 2015 was the high back in June of 2011. So we're $2 away from here. Gonna have a lot of stock to chew through here. Probably all the way up, going up to that pre-market high at 1960.
Another one of your leaders here, and this is another one that had a big bubble too. Apollo Group, APOL. The education provider there reported earnings of 55 cents versus 25 cents, 845 million versus 823 million. So they blew away the top number, blew away the bottom number, and the stock is trading up 18.5% here this morning. I'm actually pretty happy about this one, Joe. This is one of my investments in my investment portfolio. So I'm up 4 points on that. That's not a trade. That's just an investment. But I'm always, when I've got a stock in my investment portfolio and it pops up, it still puts a smile on my face. I like it better when I have the trade on, but the investments is always nice too.
Okay, this is a little different pre-market chart here, even though it is a rocket ship here. You've hit 24.93, currently trading 24.84. You really don't see anybody stepping in here to stop this momentum. This is the highest. It traded up to 22.91 back in June of this year. Have to go out a little bit farther here. Let's take a look at the weeklies to get a perspective. This stock, long consolidation period. Broke out of the $21 level. Obviously, yesterday didn't close above it. Got the move off the favorable earnings. You're just in no man's land here, Dennis. You had a real bad week in this issue back in October of 2012, where it skidded from 28.95 down to 19.53, 2039 close here. So, as long as I let the short stocks that are up 20% here, there's really not a bona fide resistance level here to step in front of until, I mean, I don't want to say, 28, 29 bucks, but you're in a vacuum here, so vacuums on the downside sometimes equal vacuums on the upside.
And when they blow away the earnings, sometimes they can continue to gather more momentum too. So I don't think this is going to be one that'll give this back here just like that. So I'm a little bit cautious sitting on my hands if I was thinking about shorting this thing too. Let's just, we got to go quickly here because we got to get to Richard Tulo over at Albert Freed. But I just want to say quickly on Safeway, SWY, because that stock is one of the leaders here this morning as well. It's trading up 8% right now. There's rumors that the stock is in play here. Cerberus Capital might be exploring a deal for all or part of the supermarket chain, and the stock is popping up to new 52-week highs here too. 35.68 just traded here, close at 32.90.
Okay, taking a look at the pre-market activity in your grocery store here. Got a nice rally up above the 35.68 level. I believe we made a high here at 30. Whoa, 35.91 is what we've hit. Getting a slight pullback here, trading at 35.68. Since hitting that 35.98 level, or 91 level. Lowest we've traded is 35.10, so I'll keep an eye on that as a support point. Looking at the weeklies here.
You gotta go up to 2007, it looks like,
you
there to find.
Really? So let's go to the monthlies here to find some resistance. I mean, a lot of times, the news comes out on these issues, and then, if it doesn't come to fruition, it falls off pretty quickly here. You had a high at 37.14 back in, you're right, July of 2007. So keeping an eye on the pre-market high and then up to the $37 level.
S&P futures just treading water here since we started the show. We're still down $8, so it is looking like a weaker open here across the board. But like we were saying, we had some rotation happening there yesterday. Don't be surprised if some of your defensive issues or some of these laggards from the last couple of years here show a little bit of life here today too. It seems like it's still a sell the leaders, maybe buy the laggards type of market. Joel, I'm going to let you go. I know we're going to get Richard Tulo from Albert Freed here on in just a minute, so we'll be listening in on that interview. Traders, have a good day, but Joel will get Richard Tulo on here in just a minute.
Okay, we're going to take a quick break here and be back with our interview. Welcome back, traders, to Pre-Market Info. We have a special guest this morning, Rich Tulo of Albert Freed and Associates, who covers Netflix. How you doing this morning, Richard?
Great. Thank you for having me on, Joe. How are you?
We're doing pretty good here. Just watching the activity in Netflix, and it's always great to get the opinion of a respected analyst. Just starting out with a few questions here uh, regarding your background, your time in the industry.
Okay. Um, I've been in the industry approximately 20 years. Came right out of school. Internship at Lehman. Uh, Industry wasn't hiring at that point, but my friends at Lehman placed me at Cowan and Company. At Cowan and Company, I was a non-agency trader making IPO markets. We brought public at Cowan, AOL, Netscape, and several other companies, and then went over to Hambrecht, where I was part of the internet bubble. Brought about 50 or 60 companies public in the tenure we were there, and I focused on internet software and media companies.
Okay,
Uh,
so
After that stint, I worked on the buy side for a while, and now I'm here.
Okay, so you're definitely familiar with bubbles. Just before we before we get into the nitty gritty here on Netflix, I'm a trader. We have a lot of traders listening here. Analysts have a very difficult job. Analyzing companies. Do you get most of your information from the companies themselves, or really how do you? There's a lot of hard work that goes into deriving these numbers. Just if you could just give us a quick breakdown of where you get your information and how you break it down.
Okay, so the way we do it is we, start with a fundamental view, and our fundamental kind of overarching strategic view is we like to do research on companies that are transitioning media from traditional distribution to uh, the cloud.
Okay.
On that premise, we like companies that actually generate cash flow and have some value versus companies that don't, because invariably you get more competition and pricing power goes down. Therefore, the cash generation enables companies to do a lot of things, either re-rationalize the balance sheet, make acquisitions, pivot to the next industry, and so we like cash flow.
Okay.
And so how we start our process is we look at the company. So we decide if a company fits that kind of mo, and then we look at the 10Ks and the 10Qs, and we use the 10Ks and the 10Qs as kind of like a blueprint for the company's economics. We take the historical data, from these financial documents, plug them into our models, and then we look at all the footnotes, and we look at all the risk factors, and we kind of take a special note of different risk factors in regards to off-balance sheet financing, accounting, because those are red flags.
Okay.
And then the second, and then we look at little hints as far as strategy, how the company manages business, put together a model, maybe ask the company some questions, and then do more industry analysis, and then when we're all done, we do the valuation model,
Okay.
and then we rate the stock.
Okay, sounds like a really thorough process that you go through there. There's a lot of things that we can look at. The price action in Netflix yesterday, the crazy pre-market activity, a lot of factors that contributed to the decline. But you have to take into account the comments that Reed Hastings himself made about the marketing frenzy sparking the sell-off in shares. Do you see that as one of the primary factors?
Okay, so what he said was he thought his company was over. He thought his company looked like times in the past when the company was overvalued. Okay, so that's what he said specifically about his stock. What he said about his company was that marketing frenzy for these shows. And as a result, they had to change their accounting because they get more usage. And when a show like House of Cards is released, unless and it tails off real fast later on, which is something that validates work we've done because we've looked on Google Trends and we've seen these kind of hills and valleys with their content, and so they had to change their accounting, which they had been accounting for these, expensing these shows, costing them right over 2 to 4 years, and truncate that into the present. So the expense of the show now closer matches the cash cost of the show and the viewership of the show, whereas it didn't before, which is why Netflix generated $100 million of incremental revenue, but only generated like $700,000 in incremental operating income, because now their income statement closer reflects. They still have aggressive accounting, but it closer reflects what's going on in the cash flow statement, which is negative.
Well, there's one thing that Wall Street doesn't like to hear anything funny about, and that's accounting principles or accounting changes, and that's
Yeah, right.
something.
And,
Yep.
and, and so one other thing about the marketing frenzy, and I think is germane to somebody like you guys, is that when you're talking about creating a marketing frenzy, that is to drive the usage of the platform, the adoption of the likability of something like a House of Cards. It may not necessarily mean that marketing frenzy actually translates to the fundamentals of the business every single time they push, right? And so they'll announce House of Cards. That should really be the kind of event data point that values the stock. But they'll announce House of Cards, and then re-announce House of Cards, and then re-announce it again, and announce they're doing some promotion, and that it's going to be on some other platform which was on already. And so you got to, as a trader, I think, and on a go forward basis with the stock, delineate between the marketing frenzy that they need to create for these, at the most it's going to be next year 10 shows, right? Versus the actual fundamental impact that it'll have on the business, because the viewership of these shows by our research and others suggests that House of Cards is viewed less on Netflix than Mad Men or Breaking Bad. All right, you can look at Google Trends and compare the Google Trends side by side. You'll see House of Cards is less sought after than Breaking Bad. So you kind of have to kind of look at that. Uh, kind of great marketing is helping the business, but not overestimate what it's going to mean for the top line, because nothing suggests that there are 20 million people subscribing to Netflix based on House of Cards, whereas everything suggests that 10.6 million people watch Breaking Bad on AMC.
Okay, so the marketing frenzy will certainly be hard. Uh, you've had $122 price target on the issue, and very a lot of respect for that. You haven't budged off that. How do you see this this possible scenario playing out, and how did you derive at that price target?
Okay, so we derive a price target from a number of different valuation methods. Well, the first thing you know um, we did in our new price target 122 is we decided to use a composite, some of the parts based on the actual fundamentals of the business, not the fundamentals of the business as they exist 10 years from now. Okay, so we get very de minimis valuation for international, $1 billion. De minimis valuation for DVDs, because although it's generating a lot of EBITDA, it's a declining business, losing 400,000 subscribers a quarter over the last 3 quarters. Okay, so a business like that more resembles something like a newspaper, which you're only going to give it between 1 and 2 times turns on EBITDA, if that much. And based on the Washington Post price, you know, even 2 times turns is too much. and we apply too. And then third is we value the Netflix streaming service with a high multiple. So that's so we get a price hit of X dollars for that. Second way, and we lean heavily on this because there's 2 points of price discovery in the market that are ultimate. One ultimate point of price discovery in the market is bankruptcy, according to George Soros, and we believe another point of ultimate price discovery in the market is the M&A market,
Mm-hmm.
right? So you have the two scales. Well, with Netflix, we have a very big comp in Hulu that gives us price discovery, right? The investors in Hulu put $750 million into the business. The highest bid that Hulu had was about $1 billion. So that's a $1.7 billion valuation on the enterprise. And we apply that. We divide it by number of subscribers at the high and the low end, and we got an average, Hulu number of around $186. Uh, some of the parts number was around $122, and then our own uh, application of the EBITDA on 2017, which were below the street on uh, uh, actually earning P ratio was 411. We have our 17 estimate, and we combine the aggregate of those three, and we get 122.
Okay, being on the buy side and stuff, it recommends stocks to buy. But do you ever recommend shorting Netflix to your customers? And if so, obviously the stock with a lot of volatility, intraday and overnight. Do you use stock or do you use options, or if clients want to short the stock, how do you approach it?
Well, the way we look at our rating system, right? Sell. Market perform means just that. It's going to perform the market. If you like the market, you don't like the market, take a shot. The stocks are agnostic, and we'll cover the company and try to help you out on the fundamentals if you have any questions. And if the stock dips intraday, we'll point that out as a possible short trading opportunity on the market performs. On our overweights, they have to pass a 30% upside test on initiation or upgrade. And so, I think unlike a lot of other firms on the street, we have a discipline in place that we think investors can make some money with if our research is. So that means sell. And shorting, last I heard, is a form of selling. All right. So how would one go about executing that strategy based off our equity recommendation? Well, a number of different ways you can do it. I would suggest that you contact an options professional and think about put spreads because that's a way you can participate on downside, eliminating your cost. And if it doesn't work out, you know what you lost, and you have no unlimited upside loss potential. And it's something like Netflix. And then you can get some more esoteric type of strategies. Uh,
Sorry about that technical difficulty, folks. We seem to have lost Rich on the line. In that case, we'll head right into our editorial headlines for the morning. Yesterday at the Apple event, Apple launched its operating system X 10.9, aka Maverick, as a free upgrade for most Mac owners, including those with machines up to 6 years old. Mac users running last year's Mountain Lion, 2011's Lion, and 2009's Snow Leopard were able to download Mavericks from the Mac App Store starting Tuesday. Warren Buffett remains upbeat about IBM profit prospects, Bloomberg has reported. He invested $11 billion in the company and was quoted saying they will have a record per share earnings this year. Warren Buffett, who's 83 years old, said on the Charlie Rose show, according to a transcript in the interview. Warren Buffett went on to say that can be disappointing if you expected more, but it is not a bad record, believe me. Let's see. Bloomberg has a report out saying that Detroit can't match Toyota's financing unit. Toyota's $37 billion in cash and credit ratings that outrank General Motors and Ford enable the Japanese automaker's financial services unit to offer more loans and take on riskier borrowers. The operation, with $95 billion in assets, handles more of affiliated dealers' direct loans and leases in the U.S. than any other automaker's captive lender or wholly owned finance arm. Toyota also uses intense data systems to keep buyers from straying to GM or Ford. Consumer Reports is out saying that two new Japanese luxury sedans scored low marks and are not among its recommended models. The publication said the redesigned Infiniti Q50 and Lexus IS 250 fell short in its tests and wound up near the bottom of its rankings. New York Times reported that American Realty Capital Properties and Cole Real Estate agreed to an $11.2 billion deal on Wednesday, in which American Realty will buy coal with a mix of cash and stock. This will bring an end to tensions between the companies that have tested much of the last year. The combined company will become one of the largest commercial landlords
Sorry
in the
about
country,
that. We were trying to get
leasing
a little.
space to companies
Okay,
including
all right.
Walgreens, Bed Bath & Beyond, and Netflix. The Charles Schwab glitch gave customers incorrect pricings for nearly a week. A report from the Wall Street Journal has showed that customers on its trading platform were shown incorrect prices on certain fixed income securities.
Okay, wait, I haven't put you back on yet. I just
This caused the financial firm to suffer from technology glitches. A spokesperson for Schwab says the firm suffered technical issues that affected a small subset of fixed income instruments, including preferred securities and collateralized mortgage obligations. Municipal bonds, which are a big part of the holdings of Schwab clients, were rarely impacted. Let's see. According to a report from Gallup, 58% of Americans now support marijuana legalization, up more than 10% in just the last 4 years. In 1969, when President Richard Nixon first directed significant federal resources towards indicting marijuana smugglers at the U.S.-Mexico border, only 12% of Americans supported this legislation. Apple aims to ship 10 million 9.7-inch iPads in fourth quarter, according to a DigiTimes report. The company's supply chains started gearing up for the release of a new 9.7-inch iPad in the third quarter and expect to see strong orders from the company as Apple anticipates a surge in shipments exceeding 10 million units in the fourth quarter, largely due to the year-end holidays. The next generation 9.7-inch iPad is expected to come with IPS panels supplied by LG Display, Samsung Display, and Sharp, with LG responsible for 70% of shipments, Samsung 20%, and Sharp 10%. A White House national security official has been fired for running a Twitter account that was harshly critical of the Obama administration. Joffe Joseph served as a non-proliferation director at the National Security Council and was involved in nuclear negotiations with Iran. In a statement to Politico, Joseph says he takes complete responsibility for the @NAT SECW NatSecWonk Twitter account, and which often criticized administration policies and top officials. Joseph says the Twitter feed started as a parody account, and he apologized to those he insulted. And last but not least, Google announced a change to ad rank, its ad serving calculation in AdWords that determines where ads show and how much each user will be paid per click. In addition to max CPC bid and quality score, ad rank will now factor in the expected impact from ad extensions and formats. Ad rank is also becoming a bigger factor in determining whether ads are eligible to display with extensions and formats. Extensions and formats now play a role in the price you pay per click and in the position your ads display. And with that, it looks like we have Rich Tulo back on the line to finish up our interview. Joel, please take it away.
Yeah, Rich, sorry about that technical difficulty here. We're back with Richard Tulo of Alfred Fried and Associates that's been giving us some very in-depth coverage of Netflix shares. And before we had that brief interruption there, we were just talking about different ways to approach Netflix on the short side if you're interested in doing that.
Right. So, okay, so let's say the caveat in general in any high beta, really any stock, right? But, I mean, especially something that trades with the intraday and price swings and flash trading qualities that Netflix shows is that you have to really manage your risk well. And so you need to do that a number of ways. So, we tell investors, really look at the puts and as ways to manage your positions. We've seen other institutions like Jeff Kamos. I'm not saying they're doing anything Netflix today or anything like that, but just in general, they'll put on pair trades. Well, they may short Netflix and buy something, a basket of stocks that include Apple, maybe TiVo, something like that. Not a recommendation, but that's kind of what they do. And then another way you could do it, and a way that's getting more popular now, is these delta trades, where an institution perhaps would be long a stock, like Netflix, and long a lot of options and leverage against it. And the dollar amounts are structured as such that if the stock goes up, it covers some of the loss in the options, and if the stock goes down, what they make in the options greatly exceeds what they lose in the share price before they sell it out.
Okay.
Which is why you'll see some hedge funds long stocks and get out of them right away in the filings, because perhaps they were actually short something against that core long position.
Interesting. Okay, what the bulls of Netflix seem to be ignoring the low barriers to entry as being a big challenge to Netflix. Who do you identify as perhaps entering the market and cutting down on their market share?
I don't think there's a low barrier to entry. That's never been something we've said. There's actually a moat there because Netflix and anybody that does streaming or even cable TV content, they have to approach the producers of the content and get those licensing rights, which is why Netflix has a $7 billion off-balance sheet, quasi-off-balance sheet liability for content, is because those licensing rights are expensive and they do create a barrier for entry. All right, so where you have competition is you have it from Hulu, which is funded by Fox, Walt Disney, and Comcast. You have competition from Amazon, which is funded by essentially sales of tablets and merchandise, and also rentals. And so they fund their streaming service from these ancillary margin on these other products. And then you have competition from a lot of rising entrants that are either renting movies online, selling movies online. RDO is getting into the space. So you do have some barriers to entry. So it's not easy. And then the traditional providers, HBO, for them, there's very little barrier to entry other than the fact they get to decide if it makes sense for them to be on the set-top box as an app. So, for example, we kind of think that HBO can go on the set-top box for about between $9.99 to $10.99 a month and take a lot of share from Netflix, because they have 40 originals, and or 40% of the content is derived from originals, and they have new movies.
Okay, some of the bulls that make a case for Netflix, talk about worldwide expansion and the company, getting revenue from overseas and European markets. How do you figure that into your equation for valuing Netflix?
Yeah, we don't like the international business for any media stock. And generally in technology stocks, when they point to international markets for growth, when you're sitting in the United States, the best, most profitable region to grow a technology business, that's a red flag. And that was taught to me by David Rocker a long time ago. All right, now, the germane to media, international markets tend to be heavily regulated and have about half the margins of U.S. markets. So if Netflix is doing 20% margin nationally, they're probably going to do about 10% margin internationally. A couple of different reasons. Not everybody in the world speaks English. believe it or not. So people in France speak French, and people. So that means that Netflix has to buy local content in addition to U.S. content. And people in Germany speak German. People in Brazil speak Portuguese, and people in Australia don't speak English the way we speak it. And so that's one thing. France is going to be very defensive about their own French film industry. And Germany has legacy competitors in their market. China only access it through a JV, of which Netflix owns less than 50%. And if you look at the income differential, somebody making $2,500 a year in China, probably not even, given the great size of their demographics, probably not a lot of people that would be able to spend the money for Netflix, $7.99 a month, $100 a month. Is a lot of money in China. Korea is defensive. You'll probably have Samsung in that business. India is defensive. You'll probably have Tata in that business. So, as you look at the opportunities, they don't have the runway they do in the United States.
Right.
They don't have net neutrality.
Right. The language barrier is something that I certainly did not take into account.
Well, yeah, that means you gotta have subtitles for every country, for every movie. Think
Okay.
about that.
Getting into the technical analysis of Netflix here, and you had put in your note that you were looking for a $60 to $100 drop, and that note looks like it was issued when it was trading pretty close to 380 here. So you pretty much nailed that. Just to wrap up the interview here, and just an overall perspective, we've already had basically an 80-point drop here. Um, it's hard to predict that, the day to day movement of an extremely volatile stock like Netflix. But could you just give us, one or two possible scenarios for, how to play this out, and let's say what you're looking at between now and the next earnings season?
Okay, so between now and next earnings season, up until the time they get the marketing engine going for Turbo Fast, the kids movie, which did awful in the movie theaters in the United States, did well overseas. I think you're going to get a little bit of it'll be a little bit tough for the company given what it's done and burned a lot of investors. Carl Icahn's getting out of the name, which means to me that a agitation for an acquisition of Netflix is not there from the investor class, the institutional investor class that owns the stock. So without the implied support of somebody like Carl Icahn, um, and the idea that maybe he was in something early and saw something that nobody else saw, and I guess you can compliment them on that. It's probably going to be a stock that doesn't react to good news all that well as compared to before. And so I would use those as opportunities to sell the stock. And then if it breaks 300, you'll notice last week it's up from 286 last week. 300 seemed to be a kind of a 300 and 310 seem to be kind of two levels. I don't do technicals, but I think certainly psychologically speaking, if it breaks 300, you're going to see a lot of people with margin calls, and there'll be pressure. And if it does break 300, I wouldn't cover it until the 280s.
Okay, that 310 call is pretty good. It did hit 308 in the pre-market, getting a little bounce up here to 317. Well, Rich, I'd like to thank you for coming on and giving that very in-depth and thorough analysis of Netflix. It's always good to hear, how the professionals are analyzing, the true earnings and the accountings of this stock. We certainly will be following it, on a daily basis here on our show. And if possible, we'd certainly like to have you back to do some follow up analysis.
Sure, anytime. Love Benzinga.
Okay, go Benzinga. Okay, all right. Thank you, Rich. We're gonna move it over to Jake over here on the news desk, and he's gonna
All right, bye bye.
update us on some movers. Have a good day.
Thanks, Joel. Just going to get started with some of the movers we got in the markets right now to keep you guys up to date. We had a lot of earnings this morning, so I'm just going to get started right at the top of the list as far as importance goes. Going to start off with Caterpillar here. That's Charlie Alpha Tango. Shares are moving to the downside. We got a close yesterday of 89.05. Shares have been ticking down ever since this earnings report. We've got 84.11 is the last trade I see, with a low of 84.05. So it looks like that $84 level is holding up. Just keep an eye on that. We also had Boeing reporting earnings this morning. That's Bravo Alpha is the ticker there. Company beat on the top line and beat on the bottom line. It's rallying ever since then. So we had a close of about a 122.47 yesterday. We had a few algo spikes in the morning. Ever since then, volume has kind of tightened up and had a high of 127.75, bouncing off that $128 level. Looks like we can't be able to break that just yet. His bounce come back down to 126.25. So looks like there's a battleground between 126 and 128. So keep an eye on that at the open. We also had a few others out there. We had Bristol Myers Squibb. That's BMY, Bravo Mike Yankee. Going to take a look at that one real quick. Very little movement in the pre-market on that one. Very thin volume. Last trade I see is at 49.90. High this morning of $50. We closed yesterday. It was at 49.76. So not a whole lot going on there. Very thin volume. So watch that at the open. They beat on both bottom line and top line. We have a few defense contractors that also reported. Northrop Grumman, November Oscar Charlie, reported a beat on the bottom line and beat on the top line. The bottom line beat was 17.5%, so a strong beat there. Despite that, there's not been a whole lot of volume in the pre-market. We saw a close of 101.40 yesterday. We got a high this morning of 104.46, but that was only one tick. Not a whole lot of shares there. Last trade I see is at 102.19. Keep an eye on that one at the open. In the same area, we did have General Dynamics this morning. Got a little bit of movement there. Again, very thin volume. We had a close yesterday at 88.15. Shares ticked up as high as 89.23, and that is the last trade I see. Aside from earnings, we've had a lot of activity in Facebook this morning. Over 900,000 shares moved before the 8:30 news rush. We're not seeing any major headlines on it other than some poor Twitter sentiment around the allowing of beheading videos. We're not exactly sure if that's what's moving it, but we're keeping an eye on it. Very strong volume, almost as strong as open market. So keep an eye on Facebook, especially at the open. Shares are down roughly 2% the last time I checked. They closed yesterday at, let's see what that closes. That's 53.05 is the close yesterday. Low this morning at 51.22, currently at 51.74 and ticking around there. We had a few other companies on the move this morning as well. I'll get you those real quick and then pass you back over to Joel. We had FedEx did come out with some comments this morning. Not a whole lot of movement there, but they did note that they're expecting a record Cyber Monday. They're expecting it to be the heaviest shopping day of the season. They're expecting a record 22 million shipments that day, while expecting 85 million shipments in the first week of December. So this is some huge volume that FedEx is looking at. Despite that, they have ticked down to 128.50 in the pre-market. Looks like that's just one or two trades there, not a whole lot of volume. We closed at 129.75 yesterday. Watch FedEx. That's Foxtrot Delta X-Ray at the open, along with other transports. And Joel, I'm going to pass it back over to you, and you guys can take us through the open. Sound good?
Yeah, Jake, thanks for the movers there. Boy, we got a lot of stuff going on here this morning. I hope everybody enjoyed that informative interview with Rich Tulo of Albert and Fried and Associates. We'd like to thank him again for coming on. It's great to get a look at the truth. What really makes most sense when you're following these stocks, you need to look at the technical analysis. We could talk about, the fundamental analysis. We talk about the technicals, but it's certainly good to hear about the fundamentals. A couple stocks that JH3 is looking at today, and I just wanted to take a look at some of the technicals here. And here is, I believe he asked us about this one before here, SUNE here. Sun Edison Company. Not a huge mover, but let's see if we can find some levels yesterday. Came all the way back up and filled that gap that you had in the issue going back in August, and now just trying to retake this $10 level. You did sneak over 10 on Monday to 10.14, but you couldn't close below there. In fact, you came all the way back down to 9.66. Yesterday, you made another run at the $10 level. Kind of trading down a little bit here in the pre-market. So I think before you can get another leg up in this, you really need to get that critical close over 10. The issue has not closed over $10 since August 1st. And August 1st, the close was 10.12, and look what the high was 2 days ago was 10.14. So like to see some closes above $10 an SUE. The other issue that JH3 is looking at is Key Bank. Likes to trade lower price stocks. Nothing wrong with that. There's certainly more liquidity. And Key Corp here. Key Corp has been inching up here. We had been having a nice run here since the $11-20 level. A couple tops to contend with. A triple top, you can call it. 1261 to 1269 encompasses the three highs. 1263 was your high back in August, so you're just kind of chewing through that level. Looking longer term, Key Corp has not been in these levels in quite a long time here. The last time we were in this vicinity was back in 2008. We all remembered what happened then back in November 2008. The stock hit 1385. So taking another shot at this 1268.69 level. Perhaps the third time will be the charm. Okay, moving in to some other issues. Might as well take a look here at Netflix. Pre-market activity in the issue did take it down to the 308 level. And now it's just flatlining here. It kind of looks like a heart monitor here. I guess people that are trading it are probably feeling the same thing. Need to get back. I'm looking at the close. It's very, when you get a stock that only drops 80, 90 points, the technical levels are a little bit more difficult to identify. But that close, 322.52, is going to be an important level. I think if you get above that, a lot of vacuum in this stock up to that low that you had on Monday at 340.10. Coming back on the downside, we did identify the pre-market low of 308. Rich had talked about support being in the 300 or 310 level. A lot of times when you have this kind of activity in a stock, you may be getting a call from the margin department. So there may be some people that are just having to liquidate the stock on the open here in order to meet their margin calls. So let's hope we get a couple days of a consolidation in this thing and be able to take a look of what the next move will be for Netflix. Apple Computer all over the map here in the pre-market. Taking a look at the pre-market activity for Apple. You have had a dip below right after the 4 o'clock close here. You dip down to 510.90, and then you've gotten a recent pop up here to the 522.60 level. I think what's significant here about Apple, and I'm going to pull this up on the daily chart, is you have two closes within a couple points of each other. So the 520 level, I think is going to be the battleground here for the bulls. I think you hold the 520 level. You can go back and challenge that high from yesterday, which was 528.45. And that high that it made at the 528.45 level, that coincides with the high that you had on January 10th at 528.72. I believe we were talking about that level yesterday. So that's going to be your major resistance point. Not a lot on the upside until you get there. Coming back on the downside, 508.03 was Tuesday's low. Taking a look here at Facebook. Taking a dip here in the pre-market, getting a little bit of a bounce here in the pre-market. You did get Facebook trading down as low as 51.22, so we'll keep an eye on that level. Got a little bit of a rally going since then, sneaking up near 52. If you want to short this into some strength, you can use yesterday's low at 52.20. That would fill the gap on the upside here, but kind of looks a little bit heavy on the chart here. Perhaps maybe the $50 level over the next few days. We'll just have to see what happens in Facebook. Let's had earnings in Boeing today. That stock was flying in the pre-market. Believe we got up into the 127 handle, making a new all-time high in the pre-market for Boeing. Should be interesting to see if any sellers come in here to take profits. To give you that exact number in Boeing, the pre-market high 127.75. We're open for business here. S&P's 500 opening up off the low of the current low of the day at 1773 and a quarter. Trading right near 1743 here. We did have a dip yesterday after we hit the 1747 level. Trying to bring my chart up here. 1742.5 was the former high of the day. So keeping an eye at 43 even here. Very minor support number. Our intraday low here still chopping with in a point. 1737 and a quarter will be our first target on the downside if we can get some momentum going. Let's take a look at Netflix here. Open for business after a crazy day yesterday. Holding in here. 320.47 is your last trade in Netflix. We are looking at the close. See if we can test the close here of 322.52. So that's your first level to take a look here on the upside on Netflix. Microsoft, we talked about this stock being weak off the open yesterday. I had that breakout, some call it a fake out, above the $35 level. It sold off all day yesterday, and now Microsoft is approaching some critical support here. Former double bottom here, right here at 34.33. You had lows in the stock on the 17th at 34.37, and a low to the tick at 34.33 in Microsoft approaching a double bottom here in the first few minutes of trading. Let's look at some of our earnings stocks here. Bristol Myers. Dennis identified some major resistance in this issue, up at $50. Institutional seller in the book at 50. Opened up at 49.82 with an 84 high. Now 49.51. So depends on how far you were leaning against that institutional size at 50 in Bristol Myers. But it's holding for now. Keeping an eye, a target on the downside could be yesterday's low at 49.21. Another earnings stock here, Lilly, Eli Lilly, another thick issue here. Came out with some decent earnings. Taking a look at the trading, and Lilly sniffed at 51 in the pre-market. Not the case here in the regular session. 50.55 has been the current high, but we're taking out those highs as we speak. Above this level here, the 51 has the resistance, folks, but there is a double top in Eli Lilly, triple top, call it 50.66 to 50.69. So Lilly approaching some resistance here off earnings.
Hey Joel, let me break in with a little news headline here. Hearing that the weakness in Facebook might be related to some comments from market research firm ITG saying that there was worse than expected transaction volumes for the month of September. We were kind of looking around for a news item on Facebook as to why Facebook shares down, opening around 2% lower, and it seems that it may be related to an update from ITG.
Thank you, Brent, for that update here. Let's move on to some of these earning stocks, and it looks like Boeing is still flying high here. 127.75 was the high in the pre-market. Boeing has gotten up to 128.67, so Boeing flying higher off those earnings. Taking a look at see what's going on in the cat here. The cat, poor earnings. Ooh, that $85 level. I bite my tongue for calling that support here. Cat opened up right at that $85 level, and then Kapui didn't even open up at 85. Opened up at 84.15, hit 84.50. Now trading 13 cents off the low of the day. I hate to say it for your owners of cat here, but there's not a lot of support here until you get under the $83 level. But we'll see if things are getting a little bit overdone here in the cat. See if its brethren here, Deere, is being affected. We had problems bringing up Deere. Oh, we got it here. John Deere here. Let's see what it's doing off this negative Caterpillar news. The stock did open lower, but seems to be hanging in there. Opened up at 83.41, made a low, getting a little bit of a rally there. So rally off the open in shares of Deere. People that had that cat Deere spread on might be wanting to readjust that. S&Ps are not holding here. We're dropping down, making new lows, 1741.75. Perhaps going to sneak down here to the pre-market low at 1737 and a quarter. You have Monday and Tuesday's lows a couple points beneath that, so could be some slow going here. As buyers look to bring in some shorts from yesterday and certainly off the open. Wells Fargo has been flirting with the $43 level for a couple days now. It did get above there yesterday, trading, I believe, up to 43.05. Had a 43.10 high in the issue going back in early September. So 43 still posing some resistance here. Netflix here, we have cleared the close, and now we are in a little bit of a vacuum here on the upside. Looking at the next possible resistance level in this stock, you had a low at 340.10 the day before the earnings. We're already in the 330 handle, so looking at as a possible resistance point in Netflix at 340.10. After a strong day yesterday, J&J does have a lower open, opens right near the low, but boom, right back at the resistance here. J&J moving up to yet close to the close, and yesterday's high always makes it a double good number when you have the close and the high right near each other. 92.36 was the close. We've gotten up to 92.42. 92.56 was yesterday's high. So you do have J&J approaching a little bit of resistance here. The other defensive stock that had a very nice day yesterday, Procter & Gamble. Procter & Gamble had a mixed open here, coming back up to test the high of the day in Procter & Gamble. Yesterday's high was 80.61. We've gotten up to 80.56 in the session. Folks, I just want you to pay attention here. You had a high at 80.53 in September and another top at 80.48. So perhaps someone targeting this $80-$50 level as an exit point. This nice run from under 76 bucks here might be running a little bit of problems here at 80.50.
Hey, Joel, can you? I got a request from the news desk. Can you take a look at AT&T? The company is going to report some earnings tonight, so heads up for those. Maybe take a look at some of the technicals we should be watching out for in AT&T.
Taking a look at AT&T here, who's going to be announcing earnings. The stock did get the Barron's pop on Monday, traded up to 35.30. Exceeded that level on Tuesday, traded up to 35.38. So got major resistance. People may be looking to take some stock off if that stock can rally back up to 35.30. 35 is the magnet for this thing. It was acted as resistance for it back in September, late September, mid-September, holding above it. I don't think if even it gets going on the downside here, we'll see too much of a sell-off. You do have support at 33.88, which was Monday's low. Going back, taking a look here at Apple Computer, had the double close at the 520 level. Seems to be holding that with ease in the session, making a low at 519. Kind of racing up here. No major resistance until you get up to yesterday's high, 528.45. But just kind of a slow rally up here in the shares of Apple. Lilly. So much for that 50-70 resistance area. We've taken that out here. Now we're approaching the $51 level. Seem to like the earnings here. Lilly hasn't been up to this $51 level since late September. So 51.04 close on September 26th. Approaching the $50 level. We'll see if there's any institutional size there to slow it down. We'll see how Bristol Myers is doing, the other drug company that released earnings today. Found some sellers off the open and did have a target here on the downside of yesterday's low of 49.21. Got down to 49 even. We've exceeded that. Got a nice bounce. So 49 providing support, getting over a 50% retracement here in Bristol Myers. So maybe making another challenge at that 49.84 level. And we won't forget about the size, the institutional size at 51. Facebook shares on the rebound, trading down to 51.13, getting a bounce up here. The current high at 51.85. This issue needs to get up to 52.20 to fill the gap here. So we'll take a look at that. Facebook shares trading down a stick. Netflix, we talked about very little resistance here above the close, and that seems to be the case. Netflix gaining some of that loss back yesterday, up 11 bucks here, 333 even. This thing moves so fast it's hard to tell you exactly what it's doing, but really not seeing a lot of resistance in this 330 handle. Minor resistance at 340, which was your low on Tuesday. ExxonMobil had that breakout over that major resistance yesterday at the 87.70 to 87.80 level. Closed up above 88, but caught people leaning the wrong way as this issue is now approaching yesterday's low. Yesterday's low 87.13. We got to 87.16, getting a bounce there. So buyers are stepping up here, keeping an eye. If you get another dip under 87.20, you may find some buyers in ExxonMobil. General Electric, shares of General Electric, which I had some 26 weekly puts on yesterday, but anyways, that stock did not rally with the market yesterday. Had a parabolic move, seems to be giving some of that back. We will look for support to come in at the I believe the 3-day low here at 25.79. You did get a tick down to 25.76. So GE came a penny from filling that gap up that it had on Friday when it announced earnings, the favorable earnings. Well, to close out the show here, the S&Ps are trading here within a 3-point range here over the first 15 minutes of trading. Pretty unusual here, holding now 41. Kind of leaning heavy on the downside. We'll be looking for a test here of the overnight low at 1737 and a quarter. Need to be aware of Mondays and Tuesdays lows right around that area, 1734, 1736. So S&P's chopping around here, down 8.5 bucks. Hope you guys and girls enjoyed the interview, and we'll be back with you with another informative pre-market show.